Alright, let's get straight to it. Today was a wild ride for the stock market, and if you're even remotely invested in tech, you probably felt the sting. First, the Nasdaq 100 got clobbered. I'm talking the second worst drop since April, down 1.4%. The culprit? Nvidia. Yeah, the same company that's been powering every AI headline just took a beating, and ripple effects spread fast. The S&P 500? Pressure all day, mostly thanks to that tech sell-off. Over 350 of its stocks actually closed higher. But today really exposed just how much the market's been leaning on a handful of those giant mega-cap names. Now, if you're tracking the numbers, here's what happened. The main US stock market index, the US 500, fell to 6,418 points. That's down almost 0.5% from yesterday. But let's zoom out. Over the past month, the index is still up nearly 2%. And compared to this time last year, a huge 14.7% gain. So, while today feels rough, big picture, it's not all doom and gloom. But man, tech stocks took a gut punch. The S&P 500, down around 0.5%. The Russell 2000, down around 0.5%. Communication services, down over 1%. Infotech, down over 1%. Big AI names, down over 1%. Even the mighty NYSE FANG Plus index was in the red. And there's a clear rotation happening. Investors are shifting out of this year's tech winners and moving cash towards stocks that haven't performed as well, which is classic risk-off behavior when the market gets jittery. Crypto stocks also had a rough time. Rare earth miners, same story, down across the board. Let's talk about robotics for a second. Serve Robotics. Maybe you remember that name from their big Nvidia partnership? Well, after an initial pop, that stock's down a jaw-dropping 60%. But here's a twist. Some analysts think Serve could bounce back, thanks to what they're calling an iPhone moment for robotics fueled by AI breakthroughs. Their delivery robots are already bringing in decent revenue, so keep an eye on that one. Meanwhile, Rich Tech Robotics slipped just over 2% last week, and the outlook isn't rosy. Analysts see a good chance of a further 15% drop in the next 3 months. All this comes as fresh economic data shows America's services sector is basically flatlining, barely growing at all. That's adding to the nerves on Wall Street. So, bottom line, tech and AI stocks are under serious pressure, investors are rotating to safer plays, and the market's reminding everyone not to get too comfortable at the top. Make sure you're diversified, stay sharp, and remember, chaos in the market can mean opportunity if you know where to look. Don't forget to hit like and subscribe for more no-nonsense market updates. Catch you next time.